Hello traders, welcome to the Next Level Trading of YouTube channel. So in this particular video, we're going to be treating how you can actually trade the gold pair in lower time frame from the higher time frame point of interest perspective. How you can actually utilize that to look at the structural delivery in the lower time frame. Meaning within the major trend, you want to look at the minor trend so that you can utilize the minor trend for your trade execution. Because there are many times you can see price react at certain sponsorship zone, fair value gaps, order block, breaker block, mitigation block, whichever block you actually make reference to as your point of interest. And then we begin to see price reaction. Price may not necessarily dip to a discount PDRA if you're actually in a bullish market condition, or rise to a premium PDRA if you're in a bearish market condition. So this particular video is going to address such situation. What we can see, during the weekly Forex focus, I called out the zone from the 4-hour time frame. This is gold and this is the 4-hour time frame. Here we have this 4-hour bullish fair value gap, which is also within the daily bullish fair value gap. But then I saw how we experienced this rejection on Friday, because we can see this dipped into this 4-hour bullish fair value gap, and then we have this sharp rejection. So that was why I pointed out the fact was that we could just see bullish continuation when the market opens. And what we can clearly see is that we are having what the bullish continuation. So it is this bullish continuation that we are going to look at the structural perspective, the minor trend in lower time frame, the 15 minutes, the 5 minutes time frame, on how you could have utilized this bullish delivery, how you could have taken trade execution. Because here in the 4-hour time frame, what you can just clearly see are just bullish candles to the upside. But then in lower time frame, you're going to find what trend within this bullish delivery we're seeing here in the 4-hour time frame. So I called our attention to the fact that we can see this bullish continuation without price necessarily having to deliver to the downside to mitigate this bullish fair value gap here in the 4-hour time frame before we have the bullish movement to the upside. So we can see how price dipped to the downside here, mitigated the bullish fair value gap in the 4-hour time frame, gave the rejection, and we can see that we start having what bullish delivery to the upside. So this was the last candle that was delivered last week Friday, and then we had what the bullish continuation. So let's get to the 15 minutes time frame, where we are now going to be looking at the concept of the minor structure, and we're going to look at that more clearly also in the 5 minute time frame. So you can see that the bullish candles we saw in the 4-hour time frame, what we can see in the 15-minute time frame, we're seeing what structural, what perspective, the market giving us series of higher highs and what higher lows here in the 15-minute time frame. In the 5 minute time frame, we're going to see more of that delivery also. So you can also see in the 5 minute time frame, we have what more of the minor trend, what delivery, a bullish minor trend delivery in the direction of the major trend. The major trend is bullish, and the most recent price delivery from the 4-hour time frame are bullish impulsive candles. We are not seeing those bullish impulsive candles in a structural perspective in the 4-hour time frame until we drop to lower time frame, and clearly that is what we are seeing in this lower time frames. So this is the 5 minute time frame. The bullish impulsive candles we saw in the 4-hour time frame, we can see in the 5 minute time frame we are having what bullish delivery, bullish structure. Also in the 15 minute time frame we have what bullish structure. So you must understand how to be able to switch from the higher time frame to the lower time frame, utilizing the perspective in the higher time frame and interpreting that perspective in a structural delivery in lower time frame for your trade executions. So what you can see is this is the 4-hour bullish fair value gap where price reacted and gave what bullish reaction. What we can see here in the 15-minute time frame, we can see that price gave us this last sell movement before this bullish movement. Price gave us this build up of what trend line liquidity. So we can see how price traded to the downside, seek the trend line liquidity, returning to mitigate this where we have the last sell movement before the bullish movement to the upside. The price did not really dip more lower to mitigate this high point, but then price to return, and we can see the bullishness. So what we can see here is price traded to the downside. This candle again was formed, volume failed to close below the previous candle, and we saw this bullishness, meaning price is facing rejection at this zone, which when you go to the 4-hour time frame, what you're going to see there is what this bullish fair value gap in the 4-hour time frame. So you can see also in this bullish candle deliveries, you do not have structural perspective. But when we go to the 15-minute time frame, you're going to see that you have what structured here. So you can see we are having what price giving what higher highs and what higher lows here. So we can see how price dipped to the downside, taking out this trend line liquidity, meaning price seeks the internal range liquidity and giving us the perspective for the bullish movement to the upside. So you can see now we have this bullish movement. Price here gave us this high. Price failed to continue bearish to the downside. Let's go to the 5-minute time frame. You're going to see the structure very clearly. So you can see the structure here very clearly in the 5-minute time frame. What we can see is the fall of price. Price traded to the upside. Price failed to continue bearish here. Here you have this what's change in state of delivery. In extension, we have the market structure shift here. So you can see the market structure shift here is actually earlier. It's seen earlier than in the 15-minute time frame. So we can see here price traded back into this fair value gap and started giving the bullish movement to the upside. So we can see here we have a high points here. Price gave us this high. Price gave us this what higher low, because price failed to create what a lower low, and now we have price again trading to the upside. So what we can now see again here is where we have the market structure shift. Here we have this break of structure. We have this bullish order block. We have what sell side liquidity. So we can see how price traded back into what this bullish order block. You can see that. So price traded into that bullish order block, seeking what the sell side liquidity, and we have what bullishness to the upside. But when we go to the 4-hour time frame, you're not going to see all of that delivery in the charts. So we can see it here in the 4-hour time frame. You can see it there. So you can see within this candle where we have this rejection, in the 5-minute time frame, we saw the structural perspective. So let's get to the 5-minute time frame, or check the 15-minute time frame first. So you can see in the 15-minute time frame here, you can't clearly now establish that bullish order block here. But though we can see here we have a valid pullback, a sell side liquidity. So it is in the 5-minute time frame you're going to clearly see that structure. So you can see it here. We have what the sell side liquidity, price mitigating the bullish order block, and we have the bullish movement of price to the upside. So we can see price now aiming for what this buy side liquidity, which is what I called our attention to, that we could see price just continue what bullish to the upside to come take out this what buy side liquidity. Since what we can see is that price reacted at this bullish fair value gap in the 4-hour time frame, and we saw this rejection, the delivery on Friday. So we can see now when price opened, the market opened on Sunday, we can see how we started getting the words bullishness to the upside down through what's Monday. So what we can now see now when we go to the 1-hour time frame, also we can see in the 1 hour you can clearly now see the minor trend structure. Now let's get back to the 5-minute time frame. So here in the 5-minute time frame, we can now see how price is now establishing structure for us in the 5-minute time frame. Return to the bullish order block, price pushed to the upside, price gave this consolidation here and then pushed again further to the upside. So we can now see again price return to the downside, seeking this what trend line liquidity, bullishness. So today being Monday, how would you have traded this? When you come to the charts, you could decide to look at the sessions. So what we can see is for the Monday delivery here, we have the bullish impulse here. When market open, we had bullish impulse to the upside. The Asia session gave us bullish, and now we saw a pullback. Price seeked what the internal range liquidity, the sell side liquidity, pushed to the upside, taking out the Asia session high. We have a breakout of the Asia session high points. Yours is to identify the liquidity to the downside that the institutions will seek to further continue bullish, since we know that we're looking at a bullish perspective. And what we can clearly see is this is where we have the sell side liquidity. So we have the sell side liquidity here, which we're going to expect to see price return to seek the sell side, mitigate the sponsorship zone, and we have the continuation. So what we can now see is, let's mark the high of the Asia session that price broke through. So we can see price broke through the Asia session high point. Price here gave us what the rally base rally. So this is a sponsorship zone that price has the possibility of returning to mitigate and give us the bullish continuation to the upside. And clearly then we can see how price dipped into where we had institution sponsored discount movement before we have what bullish continuation. Price returned to that zone, which is actually this zone here. And we have what? Another what? Bullishness to the upside. So when you possibly were in the chart and saw the mitigation of the zone, what you can see is price traded to the upside, bullish movement. Price, here was bearishness, failed to continue bearish to take this. We have this bullishness. We have what? This internal market structure shift. So what can you see? A pullback and what? Bullish continuation. Price what? Took out this high point, swept through this high points, took out the buy side liquidity, aiming to see price will take sell side. We can see how price returned to the downside. Taking out the sell side liquidity, price returned to the last down close candle that sponsored this bullish movement. Price return mitigated that, and we can see this bullish movement to the upside. So we can see how price during the Asia session here we had what bullish movements in preparation for the London session. We can see how the London session traded to the downside here, taking out this trend line liquidity bullishness, breaking through the Asia session high points. Identify the drawn liquidity to the downside. This is the sell side. It's a valid pullback. Price dipped into it. The sponsorship zone below that is this. This is more of the break and retest. So price broke through the Asia session high, returned to retest, and what? Bullish continuation to the upside. So you have to learn how to utilize lower time frames. But when we stick to the 4-hour time frame, we can see you do not really have any reason to want to execute a buy move. The suitable zone to have taken a buy move is from this zone. But what we can see here is what? Bullish delivery. So no structure. So that is why you have to utilize lower time frames. So you can see it is in the lower time frames that we'll begin to see the minor trend structure within the bullish delivery so that we can be able to execute bullish what? Movement in the markets. So this is all I just wanted to show us, guys. So cheers and God bless you all.